Welcome to the Theo video for Thursday, March 3rd, 2016. I'm Jeff White, and it was a quiet day out there in stocks overall, which is pretty understandable if you've taken note of this run that we've been on lately. And yet, despite some pretty minor net changes here across the board, there were some similarities in today's session to yesterday's action. One of those was kind of this late lift that we saw here into the close. So looking at the intraday chart here, these are 5-minute bars, but you can see how in the afternoon in particular, we pushed above those morning highs and just kind of saw a steady grind into the closing bell. And that was not real different than what we saw yesterday, even with kind of this late day push into the close to kind of lift us off of the flat line even and push just a little bit positive on the day. So another thing that we saw today was this comparison between the ES and the NQ. So of course the ES being up here in this upper portion of this window and the NQ in the lower portion. These are NASDAQ 100 futures versus S&P 500 futures, and there were some differences here that we saw in yesterday's action with the kind of early morning low here in the ES being set for the day, and yet it was undercut just a short time later in the NASDAQ futures and even kind of tested again here early afternoon, whereas in the ES yesterday we saw some higher lows established and a little bit of relative strength by that measure. Well, today we saw a very similar look in that the ES came in and kind of found some support here around 9 o'clock and tested it around 10:30, and the NASDAQ actually set a new low around 10:30 here. So a little bit of relative weakness there. Another key here is the fact that the S&P futures were capable of kind of pushing beyond this overnight high this afternoon and moving on to brand new highs for the session, whereas the overnight high here in the NQ was never even approached, even despite a few hours of upward trending price action. So the S&P still looking relatively strong compared to the NASDAQ. And when we go back here to this daily chart here, the S&P is coming up into a big area. Now we've noted this unfilled gap to 1990 from January 6th. That had been in place since then, but today we rallied all the way back up and filled that gap. Now the other thing that we did today was come right back up into this 1993 area. So we closed tonight at 1993.4. Back here off this August sell-off last year that we saw, the initial bounce carried right up here into that same area. In fact, the high right there on August the 28th was 1993.48. It's the exact same level. And we respected it just a few weeks later, could not really get over the hump there, and backed away for a few weeks here, and then finally pushed above it in October, pulled back and validated it even with a close to 1994, just verifying that that is a key level. This was, of course, last year in the fall, mid-October, and we held it and pulled back again here mid-December, got to 1993 for the low, again revisiting a level. We even briefly undercut it here January 4th, saw a temporary bounce, and then we sliced back through it. So now we have seen this tremendous rally here off the low in the S&P. This is a 10% lift off this 1810 level into where we currently stand, and that's in under 15 trading days here. So an enormous rip here to the upside, but we're of course coming into a major level here for the S&P. And so to see that coincide with extended prices, and a major level being revisited here, this is kind of a logical spot for maybe a little bit of profit taking to kick in. It would make sense at this stage, being that we filled that 1990 gap and we closed right here at 1993. So we just haven't yet seen it start yet, and it's like this market just can't quite get it done. Even the last couple of mornings, we've seen some minor attempts to move lower. However, they were both met with aggressive dip buying. And so at this stage, you got to figure both bulls and bears alike are sort of rooting for some kind of a pullback. Okay, the bears need it to alleviate some of this pain that they're in. The bulls want it for the opportunity to buy a dip, and so neither one of them have been accommodated yet. It's just a matter of everybody's kind of rooting for it and looking for it, and this market just can't quite seem to do it yet, while maybe it's under a little bit of pressure, maybe a little bit of stage fright, waiting for some kind of a minor pullback here. But seeing the broad market having ramped here lately, that's certainly notable. It really is kind of the headliner out there in terms of noteworthy things taking place in the market. But there have been some sizable moves elsewhere as well. And one such area in just the past couple of days is in the basic materials sector. So we can turn to something like gold. So a big move today higher as it starting to break out from this little pennant pattern here that we've been looking at for the last couple of weeks. So price has been kind of compressed here and a little bit of a pressure cooker type of a move. So, price rallied substantially here, and then we get the narrowing price action here over the course of the short term. All of a sudden today, a big pop to the upside, lots of velocity to today's move. We saw price make a brand new high as well. So after this pause and some compression, now price is starting to see another attempt at ramping here to the upside. So this is a very strong day. It's now poised for a little bit of upside continuation, maybe to continue this recent uptrend. So we're seeing, of course, the gold tracking ETF, GLD, making a very similar move, making a new high today. Put on a spread there yesterday during Wednesday's session that's starting to already see some benefit there. So, a lot of these, gold-related stocks are also, coming under some upside pressure, I guess you could say, and finding some ongoing interest there. And, we've noted here in a name like Newmont Mining, how unlikely it was to see momentum players walk away from the scene after seeing a rally like this from 16 to 26. And so we've had a few weeks of basing action. Now price is starting to get back on the move, and this is a real similar name, kind of out there everywhere in that sector even. So take a look at XME. This is the metals and mining ETF, and again, we had a pretty key support area found here last fall around 16.5, and it was tested again, then finally broken, and then tested for a number of occasions here from below throughout November and into early December. Finally, price failed and relented and moved on down to make a new low in January at 1138. Since then, we've seen a tremendous run up here in recent weeks, little pullbacks getting bought like we saw right here in the early part of February, and again rallied right back up and kind of tested this area but couldn't quite get through it until just the last couple of days. Now price has just blown through this area and it's really just ripped here to the upside. So lots of these types of names seeing huge runs, really coming back to life here, and a number of them from like the low single digits. If you look at letter X, this is U.S. Steel. This thing was at $6.15. It's already doubled here just since late January. So tremendous move to the upside here. You look at Freeport-McMoRan, copper. Obviously a tremendous move here off $3.50 from this low back here, and now it's north of $9. So amazing moves out there, and you can see kind of some real big moves here in just the last couple of days, and some of these little dog type stocks. This AK Steel, this VALE. Here's another one just ripped from sub $3 to north of $4. This Tech is another one here from down here in the mid fives to now approach 750 today. So a lot of these names they're getting quite extended here. And these are not sustainable, paces to these moves. Keep that in mind. A little bit of profit taking here would absolutely open the door of opportunity, though, in the basic materials sector overall. But a lot of these names have kind of turned the corner, it appears, and especially the sector as well. And now it's just a matter of maybe waiting to see if they can reset just a little bit and build some kind of new setups. But at this stage, it's extremely dangerous to try to chase them here unless you're really watching the moment-to-moment action and you're just kind of scalping those type of moves. This is really what I would consider a high-risk entry here on the long side, because you just have to figure how much of the easy money has already been made for the current move. And you got to figure a great extent of that has already been captured to where now it's becoming a little bit more tempting for those who have enjoyed this move to book some profits and therefore see prices retreat a little bit and perhaps set up some kind of a new pivot, new pattern, new setup, whatever you want to call it. That's probably a much better game plan for trying to get involved in some of these names. So, just keep some of these things on the radar. I mean, they've absolutely heated up, and they may not be done yet, even in the short term, but they are kind of getting to that stage where a little bit of a timeout would be a very positive development here. So just kind of turning back here to the broad market here. I mean, overall, we're of course coming into these major areas here, like the S&P, of course, we just discussed. Even the Russell, we looked here at this previous 52-week low from back here late September last year. That was at 1078. Well, look at this. We closed within 2 points of that tonight, right here at 1076. So we're coming right into a major level here again after 133-point lift here in the Russell. This is an enormous move, and so we may finally see a little bit of rest in this market coincide with the return to these levels. So if that is indeed the case, if it does play out that way, you've got to be realistic, and you can't expect an immediate massive sell-off. It just rarely happens that way when we've seen this type of persistent strength like we have for the past 3 straight weeks. I mean, we've had a lot of strength. Yes, we are extended here. Yes, and once we've seen a move like this. Obviously, some market participants have really enjoyed some big recent momentum, but typically they're not real quick to leave the scene and just walk right away and throw their positions back to the market and just leave them be. I mean, that may be the case, but oftentimes when we've seen this kind of persistent strength, especially in small caps, really exhibiting a real appetite for risk out there, it really may just keep a little bit of a bid beneath this market. So keep in mind that dynamic and understand that if you're adding a little bit of short-sided exposure up here, stay very small and perhaps be a little bit quicker to book some gains if and when that those do finally arrive. But just kind of maybe set some realistic expectations here for how deep a pullback might be, because oftentimes when the pressure has been kind of nonstop here to the upside, like we've seen in this market, and you can see very clearly here the Russell, we've had exactly 3 declines here along the way up, and the biggest one was right here on the 23rd of February. It was a 9-point pullback. So that's it. It's been a one-way street here. So yes, this market has ground to give up, but keep in mind a lot of people are feeling very left behind on this, and that may initially keep a pullback somewhat muted. All right. Thanks for stopping by for tonight's Theo video. We'll, of course, see you on Friday morning in the chat room. Thanks a lot. Have a great night.